Welcome to Bank Directors Acquire or Be Acquired 2020 Summer Series. In this session, we'll be talking about the bank M&A market and the drive for scale with Stephen M. Salley, a partner in the financial services group at the law firm Sullivan & Cromwell. Stephen's practice focuses on mergers and acquisitions and regulatory issues. So Stephen, welcome to the series.
Thanks very much, Jack. I appreciate the invitation. It's a pleasure to be speaking with you and with your subscribers on this topic, especially in light of the very interesting times in which we live.
Interesting times indeed. And to that very point, prior to the pandemic, Stephen, there seemed to have been a growing emphasis at a lot of banks at getting bigger and developing more scale. What was behind this motivation?
Yeah, we certainly saw leading up, obviously the pre-COVID period, significant interest, growing interest in bank M&A, leading up to last year, the BB&T SunTrust deal, which in and of itself created more drivers of conversations and thinking about the art of the possible by many people in the market. And we certainly saw 2020 leading to a very strong M&A year. As for the drivers, I think I would point to three in particular, and maybe a couple others that are situational specific. But the first would be asset/income diversification. In the environment in which pre-COVID we were, which was still a low interest rate environment, now it's an even lower interest rate environment. There was pressure on net interest margin. We saw a lot of banks looking for opportunities to grow fee income or at least diversify the interest income based on the type of assets. The second factor that we saw would be banks who have had success on the lending side, seeking lower costs of funds and strong core deposits. So that drove some acquisitions. And finally, which was cited in the BB&T SunTrust merger by the merger parties, M&A, where the synergies that are being sought are not the typical synergies that you think of in a deal, but synergies related to technology, and the ability to have a stronger base for investment and growth in the platforms that banks increasingly are using to compete not only with fintechs, but also with traditional banks who have shifted a lot of resources to the digital side of their business.
In some of the writing, Stephen, that we've done at Bank Director over the last 4 or 5 months, we've cited this, what seems to be a possible trend. Well, certainly it's a trend of transactions being shifted to digital from branches. And there's been some speculation that that's a trend that will be, to a large degree, permanent once we're on the other side of the pandemic, which would only seem to drive this need to make big technology investments even more.
Yeah, I think that's right. I think that pre-crisis, and there probably will be some degree of this, that there are some people who still need to use branches, and there is significant value in a strong branch network. But clearly, that over time has become less motivator, and in the post-COVID period, who knows, as everyone is effectively prevented from accessing branches in the normal way.
Right. Let me cite some numbers, throw some numbers at you. This is deal volume according to S&P Global Market Intelligence. In 2018, there were 250 deals, healthy bank acquisitions. In 2019, there were 259. And then 2020 to date, there's somewhere around 50.
Right.
This data was current as of a couple of days ago. I'm not aware of there being another deal since, but huge, precipitous fall off. What's behind that?
Well, to state the obvious, when the COVID crisis hit, which sometime around March, I mean, it really put a huge break, really a wall for bank M&A. There have been some, and I think probably of the 50 you cite, a significant number of them were pre-COVID, and there are some of them that I think probably are still not done, and some that we know won't be done because they've been called off as a result of the crisis. So, there was the March, April acute crisis, then Then banks shifted to focusing all time, energy, and attention on the Paycheck Protection Program, which required huge levels of commitment and resources by banks. They had no bandwidth to even think about deals at that point, even if they wanted to. And now we've kind of settled into a post-acute crisis, but we're still in a period of uncertainty where we don't really know what is going to happen with the economy. Banks probably don't really know what's going to happen with their loan books, some of which may be supported up to this point from the government interventions and stimulus. So we're still in a period of significant uncertainty, and it's hard to imagine, at least in the near term, that deals start to pick up until there is more certainty as to what's happening with the economy and what's happening with loan and portfolio performance.
So you cited this sort of this uncertain picture we have of bank asset quality. Why is it different from a technical standpoint, particularly when it gets to pricing? Why is it a challenge to negotiate and price a transaction if asset quality is embedded with so much uncertainty as it seems to be right now?
Right. Well, right now you could look at a bank and you might see that the portfolio is not performing that poorly. People making payments, even if there's forbearance. But as I alluded to, there's a lot of stimulus that has supported those payments. In fact, the PPP program itself, to some degree, may be supporting some of that economic activity that's supporting the payments. So when that falls away, and even if there's another round of stimulus, at some point the stimulus will dry up. And the question is, what happens then when the rubber really meets the road? What happens to loan performance and to borrowers' ability to perform? And it's really, really hard to diligence a portfolio in the current environment with that uncertainty, because nobody knows the answer. The bank, an acquirer couldn't even give you a great picture of their own portfolio in terms of an accurate prediction for what it will look like in 6 months. So it's even more difficult, obviously, to try to do the same exercise with a third party.
So are banks still interested large banks still interested in gaining scale, or are they just keeping their heads down trying to manage through the pandemic?
So I think there is still interest, and I think that it is not necessarily on the front of everyone's mind at this very moment, but I think it is in the back of everyone's mind, with some exceptions. We have seen deals where people are looking at opportunistic situations, and certainly there's conversations happening, as you would expect. But I don't know when, but I think at some point when things do sort of even out and we get some clarity on the direction where all this is going, all of the factors that I referenced didn't change as a result of COVID. And you alluded to the fact that branches will potentially become less important going forward. Well, if that has to be to some degree true, or at least consumers are more likely to use technology to conduct some of their banking transactions than they were before. And I looked at a survey ahead of this call, and the survey said that 30% more people were willing to engage in bank transactions either online or through a mobile app than during the pre-COVID period. So the technology factor certainly is still present, and the asset diversification search for funding is also even more important in the very, very low interest rate environment in which we are right now, and which I expect we will be in for at least the foreseeable future. So the factors are there to drive more once the barriers, which is the uncertainty, are lifted, or at least lifted enough.
Right. When you look back on the history of banking crises over the past several decades, there often has been an opportunity for the well-capitalized, strong banks that go through the crisis with relatively little problems to do transformative acquisitions, deals that really sort of alter the destiny of their organization. Do you think that some of the large banks are thinking about that now, thinking about the opportunity that might be out there?
I think that everyone is, to some degree. Any crisis is going to produce, and I don't mean to use a pejorative term, but winners and losers, at least on a relative basis, including based on stock prices. So I would expect we will see, when things settle out, that some institutions will be well positioned to engage in M&A from a financial perspective and from a valuation perspective, and others won't. And you will have opportunities to pick up assets and businesses that may have been outpriced pre-COVID. And we saw after the financial crisis, obviously, there was tremendous changes and differences in valuations following the financial crisis, which was a banking crisis. And I expect that to be the same. There's a difference, which I think does drive more in favor of M&A, in that the banking crisis, you had banks that were prohibited either from a regulatory perspective, from a financial perspective, from a capital perspective, from really engaging in transformative M&A. We don't really see that for a bank that has a strong balance sheet and capital position. They're not in the same position they were after the financial crisis. So some of the barriers that existed will not be there. Another factor is those who were not necessarily prohibited from engaging in transactions chose not to because of the uncertainty. And we have already heard from many clients who have said that this go around, they are not going to let the opportunity pass by and wait years for things to recover, only to find the things that they wanted, they now can't afford or don't want to afford based on the relative valuations. So I do think that the formula is there for a strong rebound in M&A, and it's just a matter of time, I think.
How do you think the regulators are looking today at the issue of scale? Are they concerned about bigger banks getting bigger, or was their approval of the SunTrust BB&T deal, which you referenced earlier, basically a green light for those kinds of acquisitions between very large organizations?
So I think I would say it's less of whether the Fed is willing to approve transactions of size. And without putting any words in their mouth, I think that they would probably say that we always will evaluate transactions based on the statutory factors and safety and soundness and their evaluation of the proposal. But some things have changed from a regulatory perspective. You saw the regulatory relief reform effort, where you now have the so-called SIFI designation, which was raised from 50 to 250. And that takes a bit of the regulatory costs and burden out of getting bigger, and it certainly green lights, to some extent, institutions to think about deals of size that they may not have thought of before. But I think you're right that the BB&T SunTrust deal proves that the Fed regulators will, for a transaction that meets the statutory standards, will approve transactions, even in face of there was significant public interest in that, and significant pressure, congressional interest as well. So it was approved, notwithstanding all of that, based on the statutory factors. So I don't think that the Fed or a regulatory approval is going to be preclusive, provided all those factors are met.
And certainly one big difference between today and during the financial crisis is that the industry is much more strongly capitalized. It's a much stronger industry going into this situation than it was 10, 11, 12 years ago. So that extra capitalization, I would think, would also give regulators a little more comfort in terms of thinking about the combination of two large banks that would make a very, very, very large bank.
Yeah, now Yeah, and that being said, I think that they would expect significant due diligence, obviously depending on when, but significant due diligence to understand how the acquirer has factored in, or how, if it's a merger of equals, how the parties have factored in any impacts of COVID, whether current or future, into the analysis of the deal. So, in the pre-COVID period, that wouldn't have been something they were focused on. I certainly expect it will be a focus of applications going forward.
Well, that's all we have time for. Stephen Salley, thank you very much for your participation in our Acquire Be Acquired 2020 Summer Series.
You're very welcome. Thank you for having me.
Great.